In this video, Dan Niles analyzes the current market situation following the Fed's decision to maintain interest rates, which resulted in a rally in major averages. He points out that while there appears to be supportive Fed put, the approaching Q1 earnings season could deliver a harsh reality check, as many companies are expected to lower their earnings guidance due to economic uncertainties, including new tariffs.
But transitory was dead and gone after the massive mistake they made in 2022 by calling that inflation transitory, or 2021, I should say, calling that inflation transitory. And that's sort of come back in that they're trying to look through the fact that a lot of inflation measures are headed higher. So I've often said it's not about what the reality is, it's about what people think the reality is. And much like in 2021, where inflation went from 1.4% to 7%, but the S&P in 2021 was still up 27% because the Fed said it was transitory. If the Fed is still kind of on that path right now, then yeah, I think you could have the market continue to go higher. That's what I wrote this morning, just because it was at oversold levels. But I think Q1 earnings season is going to be a massive wake-up call. But in the near term, do I see more upside? Sure, until companies have to start reporting.
So when you say you think Q1 is going to be earnings season is going to be a massive wake-up call, in what way? You think companies are just going to be revising lower their guidance amid economic uncertainty from trade and other things? Absolutely,
because, if you think about the quarters, the March quarter starts off slow because we're all in the holidays, right? It's the New Year's, et cetera. Then, so more than normal, the quarter is back-end loaded, where the last couple of weeks of March is where a lot of business gets done. But what do you have on April 2nd? You have reciprocal tariffs. Do you think a lot of consumers or businesses, more importantly, are going to go out and make some huge decisions at the end of March when you know you've got reciprocal tariffs sitting on April 2nd? So you saw this with the airlines, obviously, a week or two ago, where every single one of them cut based on business travel going down or consumer travel going down, or both. And some of the revisions were pretty large, especially given oil prices have moved down. So I think this pre-announcement season, and then more importantly, the earnings season coming up in Q1, is going to be problematic. And don't forget, estimates were already going down before all of this happened. If you look at the Q4 results, when the Mag 7 reported, 6 of the 7 companies had the forward revenue estimates cut for the most important companies out there. So estimates were already edging down for the most important stocks, and now you've got this uncertainty sitting on top of it. Each one of the Mag 7s obviously a little bit different, but I think you're going to see that trend continue and potentially accelerate, just like Powell. If you look at what he had for GDP, 2 months ago, it was sitting at 2.1%. Now it's sitting at 1.7%. You've had a 0.4 of a reduction in 2 months in GDP growth rate. The last time we saw something that severe was during COVID. So, I'm happy to see the market taking this well, but if this was 2 weeks ago, you would have gotten a very different result, I think, to those dot plots.